Welcome to Real Vision's Trade Ideas. Today we're sitting down with Peter Boockvar of Bleakley Advisory Group. It's great to have you back.
Always good to be here, thanks.
So today let's talk a little bit about commodities and the disastrous planting season that we've seen, specifically for corn and soybeans. Could you walk us through exactly what's been going on?
So as of probably a month ago now, the USDA follows as the planting season begins. And the U.S. has one planting season, as opposed to like Brazil, for example, where they have two. The U.S. really begins in March, and then it gets harvested later on in, call it October. Mm-hmm. So because of the awful weather, the flooding that was going on, a lot of it in the Midwest and down south, the time at which farmers would be planting these seeds into the ground got delayed. And the USDA, as the planting season progresses, they basically measure what percent of the fields and the acreage have been planted. And they've started collecting this data going back to 1980. So as of about a month ago, the planting intentions of farmers of both corn and soybeans were the lowest since 1980. So during the planting season, corn needs more time in the ground before it really starts to flourish, where soybeans can be planted later on in the season. So early on in March, when the weather was really bad, farmers were saying, okay, I need to wait on the corn, but worst comes to worst, I'll shift to soybeans because I'll only need less time for that. And then as the planting season got on and the weather was consistently bad, farmers not only couldn't plant their corn, but they started to get worried about planting their soybeans as well. So we went deeper into this planting season with the amount of seed in the ground being much less than historical seasons. Now, this is 2019. This is 7 years into what has been a very difficult time for farmers. So this was just almost the death knell for many farmers. Farm income is down by half. So I've been optimistic about trying to find a bottom in agriculture, and I feel like this is finally the stick in the ground in terms of getting there. So now we are finally fully into the planting season, where all the acreage that's going to be planted has been planted, and there are plenty of acres that aren't going to be planted. And the USDA specifically today gave out their estimates, where corn acreage actually was more than expected, but because of the way they calculate it, I don't think it's that accurate, whereas soybean acres planted is the lowest since 2013. And back to corn for a second, corn inventories are at 6-year lows. So there's really, going into the season, no room for error in terms of output. And I think the amount of bushels that will end up being harvested in good quality are going to be well below historical trends. So we've been finally beginning to see, mostly in corn, a price response. So corn about 2 months ago was about $3.40 a bushel. Now, I didn't see it post this USDA news, but before that it was about $4.40, $4.50. So a rather short move. And soybeans has been lagging because of worries about the trade deal with China, and also swine flu in China has dramatically reduced the demand for the feedstock of soybean or soy meal oil because of the dramatic drop in the pig population. But once that recovers and they shift to other proteins, I do think that the demand for soybeans will eventually pick up. So I'm thinking that by the time we get to next spring, when the next planting season occurs, prices potentially could be much higher. And that sets the stage for a better planting season next year, sets the stage for more demand for fertilizer, and that gets to my idea of continuing to like the fertilizer names.
And actually, so speaking of fertilizer, you were here a year ago looking at agriculture, looking at some fertilizer names, specifically Mosaic. Could you walk us through the trade that you had a year ago, what you were looking at, and whether that still holds today?
So it was a same theme of trying to, unfortunately, pick the bottom in this agricultural bear market. And a year ago, we also had the same situation where inventories were sort of thin, but the planting season last year still was relatively robust. And it's been robust for years, and that's why we've seen this sort of bear market continuing in the crops. And then, of course, you threw in the trade war accelerating, which kind of screwed up my trade because it dramatically lowered the price of soybeans. Since we were exporting 30 million tons a year of soybeans to China that basically went to zero. So I would really say that that kind of screwed up the trade. Now, Nutrien's been in a range. It hasn't accelerated to the upside, it hasn't broken down. It's just been a wide range, and you'd be collecting a good dividend. Mosaic has suffered more. It's sort of at the lower end of this multi-year trading range, which now with this, what I call a disastrous planting season, I believe finally sets us up for a move that's not just a fake out, which it was last year, but something that has more legs. Now, agriculture is still very volatile. These aren't buy and hold for a long period of time type stocks. They're more trading and you rent them type stocks. And you want to buy commodity related situations when we're at the trough, and you sell them when they've had a nice run. And to me, and I'm honing in on Mosaic rather than Nutrien, because that has been beaten down more. That has also been affected negatively by their two main nutrients are potash and phosphate, whereas Nutrien is more potash and nitrogen, which has held in much better. It's the phosphate business of Mosaic that's been more of a drag because there's been less demand out of China. They're producing some of it their own. Phosphate prices have fallen, but there's been a supply response. Mosaic has closed a phosphate mine, so there's been a supply response. So I think that that's a very interesting situation. And generally with agriculture, is as long as the global population is growing and getting wealthier, and then there's more of a middle class, the demand side for food is pretty consistent. I mean, you can be confident that every single year the demand for food is going to go up. So when analyzing agriculture, you got to get the supply side right. And I feel that this planting season, being as bad as it is, and will likely be when they harvest it in the fall, that's the supply side that finally meets up with that and falls below that demand side that lifts crop prices much higher, and fertilizers, after many years of bear market type action, will finally get a more sustainable lift.
Would you consider trading the commodities outright, so corn and soybean, or do you prefer just to stick to the fertilizer stocks?
I do think that corn, which is about $4.50 a bushel, I think you could see $5, $6 by next spring.
So even after this recent surge?
So even after this, I think this is just more the beginning of more of a surge. And on the fertilizer side, you can obviously play it too. But yeah, I think the risk reward for corn even after this move, and also soybeans, which hasn't moved as much and is still well below its previous highs because of the situation with China, could be very interesting. And I want to point out one interesting thing with Mosaic, because we see the shifting sort of trade flows now that's going on with the trade war. So China's buying less soybeans from the US, but they're buying more from Brazil. To use that as an example. Well, Mosaic recently closed on a big acquisition of a fertilizer business in Brazil, buying Vale's fertilizer business. So if more demand comes into Brazil, less from the US because of these changing trade flows, well, Mosaic is going to benefit. That Brazilian business is a gem for Mosaic, and it helps to offset any potential weakness that they may see in the US in terms of where their customers are coming from.
So almost no matter what happens with the trade war, Mosaic is hedged in some ways.
Exactly, because China has shifted their purchases of soybeans to Brazil and other countries. Brazil has been a major beneficiary of the issues that China has with us.
So then what levels would you be looking at for Mosaic? Would you enter now, or would you wait for more weakness?
So Mosaic right now is about $24, $25. It's come down from the 30s. It was recently in the mid-30s. Its recent low is probably 22, 23, so you're really right off the lows. And it's gotten a lift with crop prices, but I think this could just be the beginning of a more sustained move, easily back into the 30s, if I'm right on the underlying crop, and if I'm right on the amount of bushels that are going to end up being harvested being well below what people are used to.
And would you see it hitting the 30s over the next year or so? You would wait until at least the next planting season?
So I think you're going to go into the winter, into the spring, with prices that have gone up a lot, which will embolden farmers to say, you know what, prices are now the highest they've been in years. I've had a really difficult time. I need to really maximize this planting season. I need to go out there, I need to spend money for my fertilizer because I got to make sure I'm going to maximize every single acre of land that I have after last year's disastrous year. Which means that if farm incomes are still depressed because farmers are still having a difficult time, maybe they're going to buy less Deere tractors and they'll go more into the used market. but they need to make sure next spring that they're, assuming weather permitting, that this will be an ultimate planting season, which means they got to have the right fertilizer and they got to spend money for it. So you can see the move in these fertilizer stocks going into the planting season, irrespective of what it ends up being.
Would you put a stop loss on this trade?
So I think the risk reward is very attractive, and you can use the stop loss of just the lows we recently saw. So just before this big move higher in corn prices, and corn needs more fertilizer, needs more nutrients. So the more acres of corn that are planted, the better it is for the fertilizer. So you can use the recent low in Mosaic around 22-ish as your stop. So your downside's $2 in the shares, and your upside's what I believe is potentially $5 to $10 or more if this is the beginning of maybe a multi-year run in agricultural prices.
What would you say is the biggest potential risk to this trade?
I think it's a sort of another fake out in terms of the crop price rise. Let's just say that the bushels per acre end up being much more robust than feared because of the quality of the seeds, and it's just not ending up being as bad. And then instead of seeing $6 corn goes back below $4, it's back at $3.50. Or if the trade war accelerates and soybean prices get knocked back down again, and U.S. farmers can't find enough customers to offset the disappearance of their Chinese customer. And that's why the stop on Mosaic is pretty tight. So I think your downside is pretty limited if these risks start to materialize, but your upside, if my bull thesis is correct, could be notable.
All right, can you summarize your trade thesis in 30 seconds?
So I believe that this spring planting season in the U.S., specifically the Midwest, has been really awful. And I think that the rise in corn prices, rather than just a knee-jerk bounce, could have some legs. And I think soybean prices, which have been knocked down post-trade war, could also start to rebound as hopefully shipments start to resume to China. So Mosaic is a great way of playing this. It's a fertilizer stock that has been hit pretty hard. I think the spring planting season is going to be robust with a lot of demand for fertilizer. This stock should rally going into that. A stock at around $25 could see upside to the mid-30s, downside only to about $22.
Great. Peter, thank you so much for joining us.
Thanks, Justine.
So Peter's bullish on agriculture. Specifically, he likes buying Mosaic, ticker symbol MOS, at current levels with a stop loss at 22 and a target price of 35 over the next 12 months. Just remember, this is a trade idea and not investment advice. You should do your own research, consider your risk tolerance, and invest accordingly. For Real Vision, I'm Justine Underhill.